Hello everyone. How to invest $1000. It's not a small amount. What's small is underestimating it. Most people scroll past investing videos because they think I will start when I have more money. But let me ask you something powerful. If you cannot multiply 1000, what makes you think you multiply 1 lakh? Wealth doesn't start with capital, it starts with discipline, it starts with identity, it starts with the decision that says, I'm no longer just earning money, I'm building wealth. Today, I'm not just showing you where to put $1,000, I'm showing you how to think like an investor. Why to start with $1,000? Small money builds strong habits. When you invest $1,000, something shifts inside you. You stop spending impulsively. You start thinking long term. You start analyzing decisions, and that's powerful because the habit you build with $1,000 is the same habit you will see use with $1 million. Starting small is not weakness, it's strategic. Mindset before money. Wealth is a decision, not an event. Most people treat wealth like an event. One big win, one lucky stock, one crypto explosion. But real wealth, it's built quietly. It's built through decisions repeated daily. It's built when no one is watching. It's built when you choose investing over impulse. $1,000 invested with discipline beats $10,000 wasted emotionally. Build a safety net first. You cannot build a skyscraper on unstable ground. Before you invest, emergency savings, no toxic debt, clear foundation. Because investing from desperation leads to panic. Investing from security leads to confidence. Power of compounding. It is the eighth wonder of the world. Here is what most people don't realize. Your money doesn't just grow, it gets multiplied. Your returns create more returns, and those returns create more returns. And suddenly, $1,000 becomes $3,000, and then $9,000, then $20,000. Not because you are lucky, but because you gave time the chance to work. Why index funds win long term? You don't need to predict the next Apple. You don't need to guess the next Tesla. Index funds let you own the market. When the economy grows, you grow. When innovation rises, you rise. It's simple, and simplicity builds consistency. ETFs, the smart investors tool. ETFs give you power, they give you diversification, they give you flexibility. You can invest in technology, healthcare, global markets, all with one decision. That's leverage. That's smart investing. Individual stocks. Stocks are exciting, but excitement is dangerous without discipline. If you invest in individual companies, research deeply, think long term, avoid emotional trading because the goal is not adrenaline, the goal is wealth. International diversification. Smart investors don't limit themselves to one country. Innovation happens everywhere. Growth happens everywhere. Global diversification reduces risk and increases opportunity. Wealth thinks globally. Gold allocation. Gold doesn't make headlines, it makes balance. When markets panic, gold stabilizes. When uncertainty rises, gold protects. It's not about chasing returns, it's about building resilience. Skill investment. Let me say something bold. Sometimes your best investment is not the stock market, it's your skill set, a new certification, a high income skill, a business idea. If $1,000 increases your income permanently, that returns beats any stock. Sample low risk portfolio. Here is what disciplined investing looks like. Majority in index funds, some international exposure, small defensive assets. This is not a gambling, this is a structured. Structure builds wealth. Growth focused portfolio. If you are young, if you can handle volatility, if you think 10 plus years ahead, a growth focused portfolio can accelerate wealth. But always remember, higher reward requires higher emotional control. Long-term strategy. Markets gets fluctuated, people panic, news explodes, but disciplined investors stay calm because they know something powerful. Short-term noise doesn't define long-term results. Add monthly contributions, and this chart is a growth chart. Here is what everything changes. Add at just $50 per month. That's less than eating out twice, but over 10 years, it can transform your portfolio. Consistency is the silent multiplier. Mistakes to avoid: following hype, chasing trends, selling in fear, buying in greed. These emotional decisions destroy wealth. Smart investors think differently, they move differently, they wait differently. Market gets crashed. Market crashes are not the enemy. Crashes are uncomfortable, but they are temporary. Every major crash in history eventually recovered. The investor who stays wins. Automation strategy. Automation is equivalent to freedom. Set up automatic investments, reinvest dividends, review once a year, remove emotion, remove excuses, make wealth automatic. Wealth formula: earn, invest, compound, reinvest, and repeat. It's not flashy, it's not viral, it's not dramatic, but it works. Your $1,000 says, I choose growth, I choose discipline, I choose long term power. It is not small, it is the beginning. And beginnings are powerful. Thank you. Have a nice day.